I am Katsura Matsuo. I took over as president and CEO of Asset Management Company on February 1st. Mitsubishi Corporation UBS Realty has participated in this REIT since April 2015 and has made efforts to improve investor value to this point. We will continue working diligently to meet the expectations of all of you who have supported us, so please continue your support. I will explain the financial highlights. The results for the 25th fiscal period ended December 31st, 2018 were driven by disposition gains attributable to the sale of Matsushita IMP building. As a result, net income increased 66% period on period to 4,620 million yen. We decided to distribute the remaining portion of net income after deducting 439 million yen as a reserve for entry reduction, and the distribution per unit rose 51% from the previous period to 2,545 yen. For the current 26th fiscal period, ending June 2019, we expect a gain from the sale of the remaining co-ownership of Matsushita IMP building scheduled in March, resulting in net income to grow 5.9% to 4,894 million yen. And the distribution is expected to be 2,695 yen. Distribution during the 25th and 26th periods will temporarily expand dramatically due to the effect of gains on real estate dispositions, whereas we are forecasting steady distribution growth on a normalized basis. Excluding the effects of such gains on sales, distribution per unit was 1,684 yen in the 24th period, 1,783 yen for the 25th period. The forecast for the current 26th period is 1,859 yen, and the 27th period projection is 1,870 yen. We considered that such an environment is preferable for selling properties and carried out large-scale asset replacement, selling 2 properties in Osaka, Matsushita IMP building and MID REIT Kyobashi building, and acquiring the Yokohama Island Tower in September last year. We think that this was a very meaningful action in the sense not only of improving the profitability of the portfolio by raising the level of distribution, but also of reducing the risk of concentration onto Osaka Business Park, which was one of the biggest risks in our portfolio, hence stabilizing the cash flow by diversifying the portfolio. Internal growth has continued to be strong against the backdrop of favorable office leasing market conditions. The portfolio occupancy rate at the end of December last year was 98.5%, an increase of 0.4% compared with the end of last period. An improvement of occupancy has advanced in properties where the operational improvement after acquisition had been moderate. In Osaka, all Osaka City properties have full occupancy except for 2 large buildings located in Osaka Business Park. In addition to this, upward rent revisions are steadily proceeding. Amid continued strong operation, the stability of our fund is also improving. On the financial aspect, the appraisal base LTV at the end of the fiscal period was 42.2%. However, for this calculation, short-term borrowings of 6.9 billion yen is included in the outstanding balance at the end of the current fiscal year, and we plan to repay this with funds for the sale of Matsushita IMP building in March. Assuming that this short-term loan is repaid, the actual LTV is 40.9%. We plan to operate at 40 to 45% as the core target at the appraisal LTV, so the current LTV level is close to the lower limit of the target. In addition, the stability of distribution has improved. At the beginning, we reported that a portion of the gains on the sale of real estate was used as internal reserve for entry reduction, and internally retained earnings after appropriated retained earnings totaled 622 million yen, equivalent to 378 yen per unit. We have a policy to use this internal reserve to make stable distribution payments as a temporary scenario in which funds for payment distribution are reduced. Among the requirements that we consider necessary for trusted REITs, there are KPIs that have not yet been achieved, such as a AA- credit rating and an asset size of 300 billion yen. In addition to achieving these goals, we've set a target of 2,000 yen distribution per unit within the next few years. Our sub-sponsor, Kanden Realty and Development, has decided to sell all of their holdings, 15% in shares of the asset management company, and the asset management company will become a 100% subsidiary of Mitsubishi Corporation UBS Realty from April 1st. Although the sponsor structure will be partially changed, we will continue to operate firmly under the MCUBS Group as before. Thank you for listening to the presentation.